Events as we go into the beginning of this week. First of all, this is just a normal Monday. There's a gap down from Friday's close, but most importantly here, we are going into on Tuesday and Wednesday CPI and PPI, and then we have Warsh testifying in front of the Senate Banking Committee, and 10 o'clock both days. And why is this week so important? On a couple different levels, there's two inflation prints. We have Warsh testifying twice, so we're going to learn more about that. There's no forward guidance, but he's going to be inadvertently giving forward guidance when he speaks. And then we're going to be running back up into these previous highs that were made on a Monday, and we can see the air coming out of our markets from the perspective. There's so many different levels to list them here, but the dollar strength trade, the failure of the financials are failing to break out of their shorts from highs. Even if they broke this short, are the financials revisiting their previous highs like we're doing here? No. The VIX, we're going to be going into a brand new contract. Tomorrow is rollover. Next week, Tuesday, is expiration. And then there's all of the AI build out. And you can see that all of these, the hyperscalers, their bond issuance, their treasury issuance, they're starting to slow down. And the reason they're starting to slow down is because Wall Street isn't buying the debt anymore as quickly as they previously were. So you can see all of this slowing down. The semiconductors, everything that's associated with this AI build out, it has rhymes of 2000 tech bubble all over it. And then we have the dollar strength year that we're inside of. And so as we go into this week, we either go straight up through these levels and it's just a blow off type of top that's developing here, or we fail to break out. And if the longs hold that we're in here, great, let's go. Rally into the end of the year. What would that be on? It would be on CPI and PPI coming in much lower than expected and completely removing any fear that the Federal Reserve might have that they would need to be hawkish for longer or raise interest rates twice in 2026. Are those inflation prints going to come back lower than expected? The government reports those numbers. That's all I'm going to say. If that's what's, creating a potential problem inside of our economy, we've been adjusting consumer price and producer price inflation numbers since the 1980s. And so it is not hard to imagine, an environment where they would come in lower than expected. What they can't fudge, are like freight numbers. Freight numbers are up 253.6%. The highest readings since we had right before the coronavirus, massive increase in inflation. They might be able to paper over the numbers for a while, but the data is eventually going to come out. The point being here is that we're in an environment where these long setups that we're in. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.